Hi, this is Charlie giving you Monday's update, and I hope you're very well. What I'm going to do today is we're going to look at the S&P 500. So I've got the daily chart of the S&P 500 up here, and we're going to compare it against the McClellan oscillator, and just to see if that McClellan oscillator is much use to us when we're looking to see where the markets are and what they may be doing next. Now, the McClellan oscillator, let me just bring it up. It's not a chart for those of you who've never heard of the McClellan oscillator before. It's a breadth indicator, and it's effectively, we use it for telling us when markets may get in the short term oversold or overbought. And so what I've always tended to use is a minus 200 reading. Is if it closes below minus 200, then I deem that to be oversold, and above plus 200 is overbought. And so even as of Friday's close in the stock markets, we can see that the McClellan oscillator actually closed at minus 178, so it wasn't actually oversold the markets on Friday. Well, sorry, relative to the McClellan oscillator, they weren't oversold. There'll obviously be other indicators that may indicate that it was. But let's actually go back to the S&P 500 again, and so we can see that although it had this nice move down, the McClellan oscillator didn't say too much. But let's actually go back to when the McClellan oscillator was oversold. Now, I always say that it's a good gauge, it's an overall gauge, because just because the McClellan oscillator gets below minus 200 doesn't mean to say there has to be an immediate reaction. So it's just something to have as an overall gauge to tell you when a market is overall getting oversold or overbought. So if we go back to when we had this last reading here of minus whatever it was, McClellan oscillator at that point was closed at minus minus 208. So that was on the 1st of October, and then we go back to the S&P, and on the 1st of October, I believe it was over here. And so sorry, that's the second. So yeah, so the 1st of October was telling us we're oversold. We dipped lower over intraday, but then you can see we've already closed back to close literally as we opened with a doji, and then had a bit of an up move. Having said that, if we go back to the McClellan oscillator, we can see that before that we had another day where it was below 200 here. So that was on the 25th of September. So let's go back to the 25th of September, which probably was well, that was the 25th of September. Yeah, so therefore the next day we see we got a bounce. So just gives us an indication of when a market is short-term oversold or bought. So if we go back to the next time that it closed below 200, which was here at minus 222, that was on the 23rd of September. So if we now go back to the S&P, and there's the 23rd of September, the following day, yep, there we go, get the bounce. So you get the idea. When the McClellan oscillator gets oversold, then or overbought, then it's in the vicinity of a short-term bounce, and it could just be a one-day bounce like you have there. But it's still useful for intraday traders to think, okay, the market is short-term oversold here. We don't have to, but we may get a bounce as a result of today's close. That means we may get a bounce the next day. So, but like I said before, it doesn't always work out. It can stay oversold and stay below minus 200, like down here for a period, before you actually get the move in the actual stock market. So as we can see back here, we were below minus 200. What was this, on the 31st of July? So let's go to the S&P. So the 31st of July was probably on that day. There we go. And you can see that actually the market the following day still went down a little bit lower. Then it had a bounce. Then it came down again. So let's go back to the McClellan. That was still oversold there, and then it closed at minus 177, so it wasn't there. So on this day here, on the 5th of August, we can see it closed again at what's that, minus 218. So if we go to the 5th of August on the S&P, that'll probably be down here. No, it wasn't. So the 5th of August was there. Then it did have a bounce day that following day. Didn't do anything the next day. The McClellan oscillator didn't, I don't believe. Let's have a look. The McClellan oscillator didn't go any lower then. and then the market's turned. So that's a better example of where it's not perfect, where you're within the zone, as we could see. The McClellan oscillator was getting down there, but the market was just pushing that little bit lower before then it finally had to bounce. So just a useful indicator, like all indicators, they are just that, an indication of what a market may or may not do. So could you trade with this categorically and just say, okay, it's closed below minus 200 today, I'm just going to buy the market tomorrow? I would say no. But used in conjunction with other factors, other trading indicators. So if, let's say, the following day you start, you're a day trader and you're seeing strength coming into the market, then you know that that's in the background. Then okay, you might want to then jump onto the long side. So it's very useful for nimble traders who are using it in conjunction with other things. Okay, so that's a bit of training there today. So what's up with these markets then? Well, as you can see, the S&P just about broke below its August lows now. So let's just zoom out a little bit and put it into context. It's really not that big a deal. I mean, it is in that it's just broken this last low now. So in that regard, but it in the grand scheme of things, this pullback, and it's received a reasonable amount of attention. It's not really too much. Let's actually put this onto weekly charts, and maybe you can get a better indication. This beautiful trend that we're in here, and yet it's only a relatively small move in reality. So what would I rather see? What would I like to see? I'd love to see this trend channel lower line get struck at some point. I think that would be nice to see when you're in a big channel like this. So I mean, it's not probably going to come straight down for it. So we may get a bit of a bounce, and then we'll see if it can roll over for that. So that's what I'd ultimately like to see, a move down for the lower trend channel line there. So I think that's where I'll be looking. And so ultimately, at the moment, until proven otherwise, I think that any bounces, any rallies, should eventually then peter out and then roll over. We could easily have a one week bounce here for the next week. But then I'd still be looking to see if that's then going to roll over, and then we're going to come down to those slightly lower lows. Because in the main, we've had this tremendous bull run. We've really not had much by way of pullbacks. So a slightly deeper retracement, maybe towards the 10% level, which is normal, corrective, healthy correction within a bull market. 10% would be nice to see. We could put Fibonacci levels on, and we could be looking at levels which are much further down. So for example, if I wanted to put the fibs on, let me just press pause. Okay, so let's put the Fibonacci retracement tool on and just take it from the absolute lows, even if we don't know this is correct, but if we took the absolute lows there from pretty much, I've not put it on quite accurately, from back in 2009, and just put it up to the most recent highs, to even get to the 23% retracement, we're looking at around about 1700 on the S&P, and that would still be, fairly normal. That's if the S&P, I mean, we're talking about something like that could take months to get to somewhere like that. So that would be a fairly normal correction, really. But I'm not saying that we have to do something like that. And a 38% retracement, as you can see, is right down here at 1500. So yeah, but I mean, you go into those sort of territories, and you're into sort of a bear market again. That by the time you come down to that sort of level, but even though it's still just a standard sort of correction on that time scale. So, but it's not. I think it's a bit. The end of the day, the economy's fine. Yes, that there's a slowing of the global economy, but at the moment the US economy is doing fine. And it's harder to predict that we're going to come down that far. So what we worry about is what's happening in the very near term, and what we can touch and feel in front of us. And some of those things may be something like a move towards this trend line here on the Dow. On the S&P 500. Right, I shall stop rabbling on. We could go through the currency markets, but I think I'm running out of time. But certainly there's been some really great trading, great moves around here at the moment. So with the volatility picking up, we're seeing that picking up in the average true ranges. and so that's good for all traders. Right, stay safe out there and be back in touch. Should be, oh well, no, definitely be live trading this Friday. Actually, not going away for a change, so I'll be around this week. See you then.